What is up, my fellow YouTubers? My name is Mike, and welcome back to MK Chip Money in Life TV. Today's video, we're gonna learn how to invest in stocks like Kevin O'Leary. And if you don't know who Kevin O'Leary is, I think you do. Have you ever seen Shark Tank? He is known as Mr. Wonderful, which is actually a sarcastic nickname for him because actually his business deals aren't very wonderful at all. He's actually pretty ruthless in his business deals, but that's the nickname he inherited. This video is really a quick video of how Kevin O'Leary invests in stocks, which is something he really does not talk about on Shark Tank. I recently had the privilege of going to Las Vegas and being part of a very large conference. Now at this conference, you guys can just picture this. There's CPAs, there's marketing professionals, there's financial advisors, there's attorneys, there's all these different professions in one large conference center at the MGM Grand in Las Vegas. Kevin O'Leary happened to be there as well and was one of the keynote speakers at that conference, and it was so wonderful to hear from him. I can tell you from watching him on stage, I didn't get to meet him one-on-one, but his stage presence is very similar to how he is on Shark Tank. There's a lot of consistencies there. So we're gonna talk about the 6 things Kevin O'Leary does to invest, because this is something he normally does not talk about. And I didn't know he was gonna be talking about this stuff, but I said, hey, this would be so awesome to share. And I was really excited when he shared this information with us at the conference. So there's 6 things Kevin O'Leary does in all, and I don't know if you can read my chicken scratch, but you can try. But we're gonna go over them one by one. You can pause the screen here and see what those are. But let's start talking about them. So first of all, where did Kevin O'Leary learn to invest? Now, obviously, if you watch Shark Tank, you know the guy's super successful, like way more successful than I'll ever be, or than most people will ever be, in terms of being good with business dealings. But if you ask Kevin O'Leary, or if you learn a little bit more about him, he has a ton of respect for women. And believe it or not, the person who taught him how to invest was his mother. His mother always kept money to the side in a private account, and when she passed away, Kevin O'Leary and his brother comes to find out there's a substantial sum of money left to him and his brother because his mom was a very good investor. And in today's video, we're really sharing not really Kevin O'Leary's tips, but this is really Kevin O'Leary's mom's tips of how to invest, and that's how he's done investing throughout his entire life, really. So the first one he talks about, number one, is he talks about 5%. He says diversification is the only free lunch you get in stock market investing. Meaning, we don't want to have all of our money in one stock. We want to spread it out. And so his mom never had more than 5% in any one stock or in any one mutual fund. So he said diversification is key because it's going to help you preserve your capital as you invest. You're not going to get wiped out as easily if you have your money spread across several sectors. And speaking of sectors, that's where we get into number 2. Now, number 2, he talks about sectors. Now, if you're new to investing or wondering, hey, what's a sector? There's 11 sectors in all in the stock market. And just to give you some examples of what a sector is, 1 would be consumer goods, technology is a sector, and services is a sector. So consumer goods would be something like Kraft's foods, okay, like Heinz ketchup, Kraft's macaroni and cheese. They would fall under consumer goods. Microsoft, for example, would fall under the technology sector. Amazon would fall under the services sector. So those are some examples of sectors. So as you're building your portfolio of whether it's stocks, ETFs, mutual funds, whatever it is you're looking to do, he would suggest that you do not put more than 20% of all of your capital into one sector. So if you have $100,000, don't put more than $20,000 into consumer goods or technology or services. You guys get the idea? You guys get the idea. So that's number 2. Number 3, he talks about dividends. On stage, you know what he said? And I can't remember word for word, but he basically said that if a company you're investing in cannot pay you a dividend, they probably are not really bringing in the cash at all. So basically, he's looking for companies that provide cash flow because he wants to get and start to get an immediate return for his investment. And what he also pointed out is there's a slide, and I'll show you on screen here. He shows a slide that shows that overall, for over the past 40 years, dividend growth-based stocks, or stocks that pay out dividends, have accounted for 70% of the total growth in the stock market. Dang, that's a lot, 70%. And I think that's true because as I've looked into stocks and researched them on my own, usually dividend stocks do offer quite an advantage over other stocks. And they're usually a little bit more stable, and most of them, the ones that are blue chips and solid companies, I have to agree from my own experience and my own research that those are fantastic plays in the stock market. So he looks at dividends. Number 4, he talks about, so he's really, like I said, he's really big on income, which is why number 4 relates to that. So he says, own at least 35% of your total portfolio in fixed income-based securities. So whether it's something that pays a dividend, whether it's a bond that pays you an annual yield. And he says that also includes investments like real estate. For a lot of us, especially myself, and I know probably yourself as well, we want to invest in real estate at some point, right? Well, that would include the cash flow activities you would get from real estate. So basically a third of your portfolio in fixed income type of securities. Number 5 is an interesting one. And this goes back to the first one, is preservation. Preservation is so important to Kevin. He says people get wiped out. He's seen people get wiped out in 2008. He's seen a lot of people, he was mainly referring to the tech boom of 2000 and 2001. Tons of people got wiped out when the technology stocks just crashed. So he would rather take, the tortoise over the hare. He would rather at the end of the day know that, 20, 30, 40 years from now, he wants to know that his money's gonna be there. And I can't disagree with that. My strategy for myself is somewhat similar to his, not completely there, but I really, stuck with me that I would rather, 40, 50 years down the road, I would want to know that my money's going to be there. That's important to me too, and I'm sure it's important for you guys. But that's his thoughts on preservation. So preservation over performance. And the last one is, I didn't write it, but he says, keep 10% in cash. In your brokerage account or whatever account it is, keep 10% set aside because poo-poo happens. And those, not only does poo-poo happen, but at least he says, if you have the money when things get bad, that is the best buying opportunity. And I can fully agree with that because have you guys seen Warren Buffett? If you look on YouTube, Warren Buffett, if you start searching, I think it's like Warren Buffett 2008 or around then, you will see after the stock market crashed, Warren Buffett had the biggest smile on his face he's ever had because the money's made when stuff is cheap. The money is not made when things are expensive. So you have more opportunities to buy in if you hold cash on the side. So always remember to have at least some cash. He recommends 10% on the side. I really had a lot of fun sharing these Kevin O'Leary investment tips. I hope you guys enjoyed this video. I do want to start getting into more and more investing videos over the next few months, and I thought this would be a great one to kick it off. Anyways, that's all I have for you guys today. If you liked the video, drop a like by hitting that like button down below and make sure to leave a comment. I would love to hear from you guys and I will make sure to respond. You can help us promote financial literacy and career and life success skills by thinking of just one person who you feel could benefit from this information and by sharing this video with them. You can share this video with them by hitting the share button on your computer or by hitting the share button from your cell phone. Thank you for all the love and support that you guys give me on this channel. Don't forget, you can follow us on Facebook and Twitter by hitting those address links over there. And if you're not already subscribed, make sure to do so by hitting the subscribe button down below or the subscribe button that is found below the video. Also, do not forget to check out some of our other videos on this channel that focus on budgeting, investing, taxes, and more. I love you guys. I really appreciate you watching and just being part of this channel. I will see you in the next video. Peace.